Welcome back to the Crypto's Key Conversation. We're going to quickly jump into CoinGecko here. We're currently standing at a $1.77 trillion market cap, currently down 1.6%. And as we go down this list, as you can see, there's a lot more red than there is green. And if we were to go to, the 101 and on and look at that list, it would be the same. And as you can see, we just been in this fear and extreme fear range for some time, and we just dipped back down to the extreme fear range. We were just at 28, the fear range, just yesterday, and we've been in this range for some time. And there's a lot of variables that's been compounding on this driving force when it comes to pushing our markets down. So obviously you have Jerome Powell and the Fed, the uncertainty with their plan to combat inflation with their tapering and interest rate hikes. You have a bunch of different articles coming out with negative narratives and just so much FUD within the markets, not just our market, but even within the regular stock market. So FUD, the fear, uncertainty, and doubt, which is constantly adding salt to the wounds that we're dealing with us being in the red for so long. Coming over here, I wanted to touch on this article on CNBC where it says January payrolls report on Friday could be rough, with as many as 400,000 jobs lost by one estimate. So coming down here, the key points. It says, judging the opinions of some major Wall Street forecasters, employment either slowed to a crawl or perhaps even turned negative in January. ADP reported Wednesday that companies slashed 301,000 jobs in a month. So we covered this in our video yesterday. PNC is expecting Friday payroll to show a decline of 400,000, while Goldman Sachs is forecasting a drop of 250,000. Consensus forecast is for a gain of 150,000. So with Jerome Powell and the Fed, obviously when it comes to the labor market and the health of it, and just the overall economy, when it comes to that, it's highly important. So when it comes to their narrative or their plan to attack inflation and what we're dealing with in the economy, the job market and the unemployment and the labor force is going to play a vital role in that decision. So to see this is a negative thing. It's not seen as something positive. So obviously it can affect how our markets look or what the market sentiment's like within the crypto space as well. Because as much as we don't like to think so, we are highly correlated with the regular stock market. I mean, it's just how things are, and it's the reality, and it is what it is as of now. Something else that can, compound to, a lot of the fear and FUD in the market in general is stuff like this. It says more than 320 million stolen in latest apparent crypto hack. So it's stuff like this that brings that fear and brings that emotion out when it comes to investors within our market, which can lead to a lot of people to sell off. And even people from the outside looking in, they see stuff like this and they're like, oh, I can't trust that crypto space. I don't want to invest my money in there because this is going to happen to me. But it's just like, it's stuff like this is only compounding on the bigger issues that we deal with within our markets. I wanted to come over here and touch on this because I thought this was the truth. And we've been talking about, when it comes to crypto clarity and regulation, proper crypto clarity and regulation within our space, to help boost it. And you have, Michael Saylor, who's massive within the space. It says Bitcoin evangelist Michael Saylor says clear crypto regulations would speed institutional adoption. So just from that headline alone, absolutely, I 100% agree. Because honestly, there's so many people sitting on the sidelines just waiting for some sort of, clarity or regulation to say like, hey, it's safe. It's okay to jump in. So stuff like that. So the key points of this article, and this is on CNBC, it says tighter government crypto regulations would actually be a positive catalyst for Bitcoin. Additional regulatory clarity for clarity from Biden administration is going to benefit Bitcoin and accelerate institutional adoption of that asset. As of January 31st, MicroStrategy owned 125,051 Bitcoins. So obviously he's highly invested in Bitcoin. He's, huge into Bitcoin and the technology, and is a huge advocate of just that one asset for sure. But in general, it's not just about Bitcoin, regulation. We're talking about the entire space to have the clarity and regulation within our space. So you got to think about it like this. And we covered this in our past videos. So let's start from the investor standpoint, okay? Think about how many people are literally don't even know about crypto in the first place. But even if they knew about Bitcoin and Ethereum and they knew about, cryptocurrency, they're all sitting on the sidelines. Millions and millions of people just sitting on the sidelines because, out of fear, out of ignorance, out of just, the uncertainty within our market. It's not regulated. So imagine if we had clear, concise, and fair clarity and regulation within our space. that just entices those people to come jump in. Think about how many people invest into the stock market. You know, you have those people being more comfortable, you know, they dip their toes in, they get educated, they kind of get a feel for the space, and then they start, you know, exploring what the crypto space has to offer. So that just brings more money, more people into the space, which then grows our market in general. We're currently sitting at a $1.77 trillion market cap. So imagine if we had all those people coming in. And I think something bigger than just the investors coming in is all of the you know, the trillions and trillions of dollars of, you know, big institutions and major corporations that are waiting for some, you know, some clarity, as he says, you know what I'm saying? So imagine if that came in. I mean, that'll just catapult this space into, you know, beyond the moon. So then the most important thing, I think, is the employees, or the, you know, the people that want to work in this space, but, you know, don't really want to leave, you know, their job knowing that they have some sort of security within their job. They don't want to leave their job to go into, you know, a blockchain company or a crypto company when there's uncertainty if that company is going to exist, or, you know, if they're going to be, you know, overregulated out of existence and in general. So imagine if all those employees, they had the clarity, they had the regulation within the space, and there was some sort of, almost in a sense, a safe haven for them to come in and work for these companies. What's going to happen when you have all of those, you know, brilliant minds, innovative minds, just different ways of thinking coming in to support all these digital asset companies? It's going to boost innovation. It's going to boost productivity, production, and in turn, it's going to boost the entire space. More innovation, more things, solving real world problems. There's a lot of digital assets out there that are solving real world problems. So if you have more workers working on, you know, fighting the good fight, that's just going to help boost our space. So I think this is absolutely massive, and I think that is something we truly need. And obviously we have, you know, the SEC versus Ripple case going on, which is truly going to set precedent for the space. So, you know, it'll be tremendous if Ripple wins this case versus SEC to kind of, you know, take a little bit of their power away and have some sort of fairness and just clarity within the space. But, you know, if the SEC wins, then, you know, they're going to have more power. They're going to go after everybody. Nobody's safe. They're going to overstep, overregulate this space, and it's only going to help. I mean, it's only going to hurt and hinder this space's innovation and growth. So I think this is absolutely massive, and I can keep going all day with that, but we're going to move on here. So I wanted to touch on this tweet on documenting Bitcoin. It was a video with Michael Saylor, and he was asking. This is from Jack Dorsey from Twitter, but he's now the Block. You know, he's running the Block company, and is kind of talking about what makes Bitcoin different. And I wanted to kind of touch on this. So let's listen in.
Predictable. It's deliberate and it's predictable. I mean, Bitcoin gets a lot of knocks, especially in the mainstream media, the technology mainstream media versus Ethereum in terms of speed of development. Ethereum moves very, very fast in comparison. But it's a question of, you know, what is the ultimate outcome of those moves? Bitcoin is very deliberate about what goes in and what stays out. And that does mean it's slower, but those slower things tend to last. And they tend to be a whole lot more predictable in terms of the direction they're going. They tend to be a lot more secure. They tend to have far better uptime and usability than anything else. And that's not to say that there's a ton of great ideas in the sandbox everywhere and happening in all these other projects. They're great sandboxes that will test ideas very, very quickly. But that deliberateness is what makes Bitcoin, to me, the potential for this internet's native currency, and gives so much confidence as a business owner, as someone running one of these companies, that it's going to stick around, and it's going to serve billions of people throughout decades going forward.
Yeah, you can have lots of innovation at later.
So I just wanted to kind of bring that into the conversation. So obviously, you know, they're talking about Bitcoin specifically, but this entire space. Bitcoin, this is how I say it, is the mothership or the umbrella of the entire crypto market. You know, it's the first one. It's, you know, it's been in the #1 spot since inception. So it's like, it's absolutely massive. But the entire space can offer so much to change our everyday lives and to help make our everyday lives more efficient, better, find new innovative ways to do things. Absolutely. So I wanted to touch on some positives, some other stuff that's going on. So this article from Blockworks, it says, in win for crypto stakers, IRS offers refund on untraded token rewards. A decision to refund taxes paid on staking rewards could have large implications for how proof of stake miners and stakers are taxed in the future. Tokens obtained through proof of stake protocols are taxpayer created property and should not be taxed until sold or exchanged. So, you know, whatever turns out to, you know, to be the final verdict of everything when it comes to this, I mean, it's absolutely massive that this is even brought up. Because, like, quite honestly, you know, if you're staking your assets, you know, and you get rewarded for something and they don't tax you unless you sell it, it's kind of nice. You just kind of continue to accumulate your asset. So we'll see. We'll kind of keep tabs on kind of what goes on, and you know, when it comes to the, you know, the final deliberation or documentation behind this, we'll kind of update you guys. But another thing is coming over here to Cardano. Cardano adds over 100 smart contracts in just 2 days, highest ever jump. So we covered Cardano in a while back in our videos, talking about, you know, the metaverse that's setting up with, I think it's Privia is their thing, and then, you know, you have Sunday Swap. And then Cardano's just been, you know, fighting to make sure everything's right whenever it comes to, you know, whatever DEX is utilized on it. And obviously Cardano's massive. Charles Hoskinson and his team have just been trying to truly set a solid foundation for the entire company and their entire asset. And there's just been so much growth within Cardano. And I know there's a lot of Cardano holders out there like myself that's waiting for, you know, a nice price increase. But, you know, this is just a positive that comes out. So it's a growing ecosystem. You know, it's getting stronger day by day. So it's got to hold on strong. Coming over here, Blockworks also tweeted, it says, just in, Russia's Minister of Finance proposes letting banks sell crypto. So that's a positive. It says cryptocurrency should be treated as investments in gold and other assets, the minister wrote in a letter. So I totally agree. And this is huge. That's positive. So we're going to end with this one here. So 9 out of 10 biggest crypto raised in 2021. FTX, 420 million. Bitmain, 422 million. Genesis, 431. Circle, 440. MoonPay, 555. It was just So Rare, 680, Forte, 725, Celsius, 750, FTX, 900 million, and NYDIG, 1 billion. There's so much, this is crazy because there's so much like adoption happening. There's so much, you know, as they say, you know, this was just in 2021, let alone what's going to happen in 2022, 2023, and so on. There's just venture capitalists and everyday investors, you know, big institutions, retail investors. There's so many people invested in all these projects because they see the writing on the wall. They see where this future is headed, and it's absolutely massive. Adoption has happened. I truly have high conviction on this space and truly believe we're on the right side of history with this. So I'm going to continue to accumulate and hold strong. But I just wanted to give you my my take on what I feel is going on in the market and kind of talking about where things are at. But, you know, as I said, we're at 1.77 trillion. We're so early to the party. With that being said, stay strong out there. Be safe.